Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Hey everyone, checking in on the market. We'll start it off with Netflix that reported earnings. Initial spike up, big bear move down, lower high, higher low, lower high. So we got a tightening 2-minute range to be watching. Initially, it's a bearish reaction, but considering where we ran up from, all in all, it's pretty uneventful. So there's a gap to fill on the daily chart down to 341.09. We'll see if we fill that level tomorrow, which is likely. Then there's even another gap down at 325.37. So some consolidation. Let's see if it marks consolidation in the rest of the tech sector. If next week when we start to see some further tech sector earnings and they pull back as well, then that could be the potential catalyst for the market top. But as far as right now goes, this isn't any kind of huge bear break or anything like that. The bulls are still clearly buying some of these dips, and we'd have to break to lower lows out of this pattern for it to have continued negative impact into tomorrow. So tomorrow is going to tell all when the real volume hits once the bell rings, as always. But initially, bearish reaction, but overall pretty uneventful for the market as a whole, just watching the after hours action. So we're going to have to continue monitoring the SPY daily chart. And someone asked why I use SPY and don't look at the Dow. And the reason is SPY is 500 companies, an aggregate of all that data. And the Dow is only 30. And I don't like how only 30, it's just such a small view in my opinion. And I can remember back in the past when I was starting to chart these major names and major markets that Nike had a big bearish day, and the S&P 500 and the vast majority of the market was green that day. I forget whether it was news or earnings or what, but Nike dragged down the entire Dow, and the Dow was red, and it gave a completely untrue picture of what was going on in the rest of the market. So the Dow's in the red, meanwhile everybody else is in the green. So I didn't like how one company had that significant of an impact. So looking at SPY on the daily time frame, another bullish day today. We had some wild action. It was a pretty slow day. Looked like everybody was waiting for the earnings from Netflix. Yet another lower open where bulls buy the dip. And again, we've seen this so many times at this point. Look at this hourly chart with extended hours turned off. Bulls bought the dip back here on the 10th, January 10th. Bulls bought the dip here on the 11th. They bought the dip on the 14th. And here they are buying the dip on the 17th. Every single lower open that we see has been met with bulls buying it. And, you know, I'm looking for a break in that action, which will be marked by an initial start to the morning for the bulls and then a turnaround and a bear break of the low of pre-market. So every morning I'm watching, okay, low of pre-market, key support levels from pre-market. To prove anything, the bears have to break these levels. So just heading into today, I was doing that as well, where I was saying, let's turn on the extended hours here. And I was saying, all right, if the bears are going to get any traction, I picked out this level right here, 259.50 and 259.31. So we started the morning right around 260, and I said, if the bears are going to prove anything, we have to break these levels. And of course, the fact that we didn't and didn't even come close shows us that the bulls were in control the vast majority of the day. So we had this spike up here, and a bit sketchy. We know these markets are, you know, run by insiders, and we're just following their coattails, trying to pick up the scraps here. But news coming out saying, you know, maybe Trump's going to lower the tariffs on China and not enact them to speed up the deal. And then we have someone from the Treasury coming out and saying, we're not really at all close. That's not really the way I interpreted their response was, you know, we didn't really put out any information that indicates that. So it was almost just like a, hey, market is really bullish, and then giving it all back when the market was like, oh, wait a minute, that's not really real news. So a lot of volatility that ended up being a bit of an equilibrium right into the close. And here after hours, not a whole lot going on. So Netflix not having enough of an impact with its range right now to be affecting the broader market overall. So hourly support for SPY, we did not consolidate today to form an hourly higher low. We started at the low of the day and we ran up all day. So the hourly chart is extended. And the next time we pull back, we can assume that we are going to form an hourly higher low. Compared to 259.10, the bulls have a lot of space to work with. And of course, we're going to have to change that hourly trend for the bears to get any kind of momentum. So a little bit extended, some healthy consolidation should be anticipated in the near term, but we're not going to lose that hourly trend unless we see a pullback in the morning, a bounce attempt with the inability to break the high of today, and then a drop to a lower low tomorrow afternoon. So bulls pretty comfortable with where we are heading into tomorrow in terms of the hourly action from today. So looking at IWM on the daily, continuation for the bulls as well, putting more and more space between the last daily higher low at 142.09. Next resistance, 146.76 we are approaching, and the bulls maintain full control. The hourly time frame here built a little bit of a base of support right at 145 psychological, with a few hourly candles bouncing off of that level. So that's the first support level to be watching before the low of the day. So I'd say that's a little bit more support than SPY has on the hourly time frame, but not by a whole lot. Obviously a very significantly bullish day as well, with the bulls in control the vast majority of the day. QQQ on the daily time frame, lower open with bulls buying the dip. Also broke the high of yesterday of 163.78. So we look at the hourly time frame here. We have a higher low here as well, 162.45 for the bulls to keep control. And if we break 164, let's try that again, 162.45, then that will be the loss of the hourly uptrend. But as long as that level holds, bulls maintain their full control. XLF continues to run on the back of its earnings, breaking the double top, following through every day with a higher low and higher high. Hourly support here, very clear at 25.17. We did break to a higher high on that bull news from SPY there, but didn't get a whole lot of follow through. So still watching that resistance around the 25.57, 25.65 zone. And again, anything above 25.17 is an hourly higher low. So even if we start tomorrow with consolidation, we're just going to be looking for that hourly higher low to form, unless, again, once that bell rings, if we see Netflix dump and get down to the 320s, that would have an impact on the broader market, in my opinion. But if that doesn't happen, then the market's going to probably disregard Netflix earnings and move on from there. So again, checking back in on Netflix, pretty uneventful, continuing to tighten up. VIX did not follow through with that hourly trend change at all. Higher open, again, just like SPY is seeing the lower open with bulls buying the dip, VIX is seeing higher open for the shorts to make, VIX is seeing higher opens that are taken advantage of by the shorts as we just fade all day. And that's happened 4 times in the last week plus of trading. So we're right back down to the lows, and we actually broke to lower lows, 1798, 1785, and this is a resistance zone now, 1919, 1936. So some lower $19 resistances, but we look at this daily time frame, trying to level out and build a base of support here, but obviously not getting any of that bull follow through that is needed to give the bulls that confidence. Oil continues to tighten up. I like the 4-hour time frame for clarity here, and we're just looking at our high, low of the pullback, lower high, higher low, and I'll call that a double top, 52.50. Broke it by 6 cents, but didn't get much follow through yet. Most important support level is 50.96. If we break 52.50 more convincingly, the bulls are going to try and follow through with this bull flag tomorrow on the daily. So they have to break 53.29 to confirm that daily bull flag, but they're still in full control at this point, and it would require breaking 50.96 to change that in the short term. And there's our 12 and 26 bullish EMA cross on the daily. First time since it crossed bearish back in the 70s. NatGAS continuing to pull back. Again, the upper wicks are not ideal for the bulls. They want lower wicks. We have a daily inside bar. Break of 3382 is bearish tomorrow. Break of 3607 would be bullish. 4-hour time frame, just a lower high formed. So another little mini equilibrium. We had the lower high and lower low setup. Now we got a lower high, and we'll see if the bulls can hold 3356 to form a higher low and give us a true equilibrium that tightens up a bit more than that. So bulls are just trying to defend support, and we have clear lower highs of resistance with our most recent one at 3607. So bears have the slight upper hand in the short term, and that will change if we can break the 4-hour lower high pattern. So that's where we stand heading into tomorrow. We'll see how Netflix breaks this 2-minute equilibrium shortly, and that will have some impact into where we start tomorrow as well. Hope you have a good night. We'll see you soon.